When you're doing research about setting up a new company, chances are you're going to come across a bunch of content that really promotes the S Corporation. And after trying to put all those pieces together, you're probably going to conclude that the S Corporation is the way to go for you. But do you actually know what it is? And is it right for you? Well, that's what I'm going to talk about in this video. I'm going to discuss what exactly is an S Corporation, why do people choose to have their LLC taxed as an S Corporation, and how much money in taxes does it really save? And if you stick around to the end, I'm also going to discuss 4 reasons your business should not be taxed as an S Corporation. So if it's your first time here, my name is Navi Miraj. I'm a CPA that helps small business owners save thousands of dollars in taxes. And one of the ways I do so is by creating content on YouTube and other social media platforms. So if you get value about what I'm about to discuss, please do me a favor and click on that subscribe button. So let me transition to my computer here for a second so that I can explain this to you not just with audio, but with visual as well. So let's first discuss, what the S Corporation actually is. So the S Corporation is a tax classification, not a legal entity. So what do I mean by that? Oh, well, if you look here across the top, I've kind of dictated what the legal entity types are. So we have sole proprietorship, single member LLC, multi-member LLC, and corporation. Now, you might be looking at this and saying, okay, well, what do these little acronyms stand for over here? Well, the P here just means professional limited liability company. So in some states, just so you know, in some states, typically if you hold a license with that state, such as maybe you're a physician, attorney, even a real estate agent, sometimes those states have statutes that say, hey, you need to form a professional limited liability company, not a regular limited liability company. All right. Same thing here on the corporation side. This PA stands for professional association. In some states, it might be called professional corporation. But the idea here is that there are many different legal entity types: sole proprietorship, single member PLLC or LLC, a multi-member LLC, and a corporation, right? So then let's talk about what I have down here below. I say that we have different tax classifications. So you can be taxed as a sole proprietorship, you can be taxed as an S corporation, you can be taxed as a partnership, and you can be taxed as a C corporation. And so the point I want to drive home is you don't see S corporation up top here as a legal entity type. You don't go to your state and say, hey, I want to form an S corporation. They're going to say, well, that's great, but an S corporation is a tax classification. So go talk to the IRS about that. We can help you form an LLC or a partnership or a C Corp, but we can't help you with that, forming an S corporation. So that's what that's not necessarily what these blue lines indicate, but let me discuss what these blue lines indicate. These blue lines really indicate what the default tax classification is of these entity types. So by default, if you operate as a sole proprietorship, then really the only way you're going to be taxed is as a sole proprietorship. The sole proprietorship is kind of unique in a way that, that's sort of like a legal entity type, but it's also the way, also the way you are taxed. If you form a single member LLC, what I mean by single member is there's just one person, then by default, it's taxed as a sole proprietorship, okay? If you form a multi-member LLC, which means you form that LLC with yourself and one other party, then that by default is taxed as a partnership. And a lot of people actually aren't aware of that. That causes issues that we can talk about at a later time. But basically, I want you to know that if you file a multi-member LLC, you'll be taxed as a partnership. And if you file a C corporation, then by default, again, you're taxed as a C corporation. It's kind of similar to like the sole proprietorship, where if you file a C corporation, then by default, you're going to be taxed as a C corporation. Now, what do these red lines indicate? What the red lines indicate are tax elections that you can make. So the single member LLC can make an election to be taxed as an S corporation. A multi-member LLC can do the same. A C corporation can do the same. All right. So these entity types can all make elections to be taxed as an S corporation. So the big distinction here, again, I'm going to repeat myself a little bit, but it's important to drive this point home, is that an S corporation is a tax classification, and you form your LLC or corporation with the state, and then through the IRS, you then make a tax classification, or an election rather, to have the S Corp tax treatment. All right. So I just want to let you know that that's what it is. It's not a legal entity. It's a tax classification. So why do people choose to have their LLC or corporation taxed as an S corporation? As I said in the beginning of the video, anything that you read in like a blog article or some books, or what you see with a bunch of content creators on YouTube, for example, is they're really pushing this S corporation. But it's important that you understand why, and not just take their word for it, or even my word for it. So I'm going to explain that to you. So really, the S corporation is all about saving money in self-employment taxes. And I'm going to walk you through that here with this slide. So if you take a look, what I've got here is on the left, I'm saying this is a sole proprietorship or a single member LLC that is using the default tax classification and being taxed as a sole proprietorship, right? Over here on the right-hand side, we've got an LLC or corporation that's elected to be taxed as an S corporation, okay? Now, we're going to just compare sort of apples to apples here. So what happens if you are a business that has, let's just say, $125,000 in revenue, and you incur $25,000 of business expenses? That leaves you with a $100,000 profit, right? So I'm saying, hey, what taxes are you subject to as a sole proprietor who earns $100,000 in profit? And what taxes are you subject to as an S corporation, someone who's taxed as an S corporation, and you earned $100,000 profit? So let me skip over the self-employment tax for just a second and say that what these things, what these acronyms mean. So FIT stands for federal income tax. SIT is standing for state income tax. And what I want you to just kind of, I guess, comprehend might be is that the taxes for federal and state income taxes are really going to be the same for the sole proprietorship and the S corporation. So then you might be saying to yourself, well, then what's the whole point of the S corporation? Well, the S corporation is honestly almost 100% all about saving money in self-employment taxes. That's what the S corporation is about, and that's where you should sort of focus on. So what taxes, or what self-employment taxes, I should say, does the sole proprietorship have to pay? Well, on $100,000 worth of profit, the sole proprietorship has to pay 15.3% in self-employment taxes. If you're not quite sure what self-employment taxes are, it's really your Social Security and Medicare taxes. And so, you know, the math is kind of easy there. On $100,000, you multiply that by the 15.3%, and you get $15,300 in self-employment tax. Again, this company is also going to pay, or this individual is also going to pay federal and state income taxes on their $100,000 worth of profit. Now, for the S corporation, you know, what self-employment taxes does the S Corp owner have to pay? So here you have the $100,000 of profit still occurred, right? Just by becoming or electing to be taxed as an S corporation doesn't necessarily mean you made more revenue or that you had more expenses. I'm saying you still landed at $100,000 in profit. So what happens? Well, what you do here with this strategy is you actually take a salary, and only the salary that you take is subject to self-employment taxes. Now, when you employ, I'm just going to be a little bit specific here, a little detailed, but technically these aren't really self-employment taxes anymore. They end up sort of being called FICA taxes, but it's really the same thing, Social Security and Medicare taxes. So the point I want to drive home is that $100,000 of profit that you earn is now separated into two buckets. So one bucket is your salary, and one bucket is what you could refer to as like a distribution. The sort of tax lingo for that is like a K1. And so if you split salary of, let's say, $40,000, then you're only going to pay self-employment taxes of $6,120 because only $40,000 was subject to the 15.3% in Social Security and Medicare taxes, right? So you only paid $6,120. Well, what happens to the 60 grand? Well, the 60 grand that you took as a distribution no longer is subject to self-employment taxes. So its rate at, Social Security tax is zero. So it pays $0 in self-employment taxes. So the point I want to make here and just to really drive home is that you're getting a tax savings of like $9,000, right? So here, as a sole proprietor, you were paying $15,300 in Social Security and Medicare taxes, and here, as a S corporation, you're paying a little over $6 grand. So the difference, $15,300 minus $6,120, is $9,180. Now, the math doesn't work out exactly like this, but this is a good way of seeing how the S corporation can save you, in this case, thousands of dollars in taxes. So, it's a pretty strong tax strategy. So, with that being said, should your business be taxed as an S corporation? Well, chances are it might benefit from it, but it may not. So let me just quickly kind of just say, like, hey, if you're getting a lot of value out of this video, not only do I want you to subscribe, but if you're like, oh my God, I just learned so much, I want to form an S Corp or an LLC or what have you, I'm just going to transition to a site here called fileyourbusiness.com. Full disclosure, I am, affiliated with the site. But I created fileyourbusiness.com to educate you on the questions that you might have or you may not be asking yourself on business formation. So if you go and you navigate to the site, you'll see here that it'll talk to you about business formation. And if you want to start filing, I've actually compared some of the top online business formation services. So you have Inc. Authority, Inc. Files, and Business, and some others, right? What I was really surprised at when I refreshed the website and made this was like, Inc. Authority has partnered with Damon James from Shark Tank, and it's literally free to set up an LLC there. So if you actually click on this link here, it will take you to the Inc. Authority website, but they don't charge for setting up your LLC. The only thing they really charge for is your EIN number. You can get a registered agent for free for the first year. And they'll even do the S election paperwork for you for free. Anyway, there's other things you need to educate yourself about, but basically if you use any of those companies, how it works is you kind of get guided with some questions, and based on the way you answer those questions, the forms are going to get completed for you. But you don't have to worry about like the language that the government uses or the states use that are kind of confusing. They're going to sort of dumb down that language and ask you them in easy to understand questions. And once you hit submit, they'll file all the paperwork behind the scenes and form the entity for you. But if you're not ready, you still have questions, you can watch my videos, or you can visit this learning library here. I answer a bunch of questions about different entities. What is an EIN? What is a registered agent? What is an annual report? All that stuff is answered down below here as well. But the point I just wanted to make is if you go here, I compare the top companies for you, and you can actually start filing by clicking on any of these links that you see here. Anyway, back to, why should your business be taxed as an S corporation, or why not? Is it right for you? And the answer is maybe, and I don't want to give you that maybe answer, but basically there are 4 reasons why I feel your business should not make the S Corp election, right? So if you're a sole proprietorship, and you've maybe formed an LLC, maybe you want to stick to that sole proprietorship tax classification. Let's briefly kind of touch on those reasons so you actually understand why. So one reason is just the cost of running an S corporation. So if your business is not producing at least $40,000 in profit, then chances are the S Corp is just not going to make financial sense for you. The reason why that is there are additional costs like additional tax prep fees. You're going to have to probably engage a payroll company. And so those things cost money. And so a payroll company might cost you as much as $50 a month, maybe $30 a month. S corporation tax filing, well, any competent accountant's probably going to charge you at least $500 for that. If it's complex, it could be more like $1,000 or $1,200. But those are costs associated with it. And so if you sort of execute the S Corp strategy and you're profits are below 40 grand, well, you're probably not going to save any money, because by the time you pay the payroll company and a tax professional prepare the S Corp tax return, you're really going to be at a loss. So I would say, maybe 50,000 or so or more is when you should execute that strategy. All right. The second reason why you shouldn't be an S corporation is if you earn W-2 wages. So what I mean by that is, like, you have, you're employed somewhere, you're an employee, but you got a business on the side. That's another reason why you need to consider the tax implications of how all that works together and decide whether an S corporation is right for that little side hustle that you got going on. So I'll just kind of give you the high level overview, but basically, if you're making, I would say, around 120 grand at your job, then you may not want to deploy the S Corp strategy. And by the way, if you're wondering, like, I've actually created detailed videos. Actually, I've created an overview video that talks about the 4 reasons why you shouldn't be taxed as an S Corp. And then I've created detailed videos about each one of those reasons. And they're all here on YouTube and on my website. So you can visit, obviously, my YouTube channel or go to my website, navimuradcpa.com. But again, I am, giving you the high-level overview here on those 4 reasons why you may not want to be taxed as an S Corp. So the first one was, it doesn't make financial sense because you're probably not having profits of $40,000 yet in your business. The second one is you got a high W-2 wage job. So let's say you're making 140 grand or so, 120 to 140 grand. You need to start considering that. The third reason is you might live in a city or a state that actually taxes the S corporation. So there are certain cities and states that tax S corporations higher, and it's seldom. There's only like 4 or 5. But you want to make sure you're not living in one of those cities or states before you execute the S Corp strategy, and it ends up costing you more money and you're not saving any money at all. The fourth reason is you engage in mainly passive income type activities. So a big one that comes to mind is if you have buy and hold rental real estate, right, where you're the landlord, you've got a tenant in your property. That's passive income, and it's not subject to self-employment taxes from the get-go. So actually, if you form an S corporation and you throw that income in the S corporation, you're actually now going to pay more taxes than you would as if you were just taxed as a sole proprietorship. So that is a big no-no. So don't do that. And you might be saying, oh, who the heck is doing that? There's actually a ton of people that have contacted me and said, oh, after you're watching your video, I realized that I got bad advice, or I did this on my own, and, how do I reverse it all? So don't fall, victim to that. So if you've learned something here with me talking to you, this is really just the beginning in terms of what I sort of teach. And so what I want to mention to you here is I actually am developing a course, and in that course, it's really designed for business owners, but you can visit this webpage. It's my website. It's navimuradcpa.com/learn. I'll link the description below. But if you go here, you can put in your name and email and be added to the waitlist because the course is in development. But basically, if you go to this page, I'll teach you about what you're going to learn. So you're going to learn the basics, basically taking you from knowing nothing about taxes and really building a core foundation. So you learn about what marginal tax rates are, effective tax rates are, how our tax system kind of works here in the U.S. And then we're going to layer on that foundation. I'm going to teach you the powerful tax strategies that I kind of discuss on my channel. But taking that a step further, I'm then going to help you implement those strategies, right? So we're going to teach you how to do all that within QuickBooks or your accounting software. So if you're interested in that, visit my website, be added to the wait list, and then what I'm going to do is send out anyone who's on the wait list a pretty strong coupon to save hundreds of dollars on the price of the course. So I shouldn't say hundreds of dollars. I don't really know how much I'm going to price the course at just yet, but I could pretty much say with confidence that that coupon is going to save you at least $100. So if you're interested, go ahead and sign up for the waitlist. So let me wrap up this video here and just say that, if you're interested in knowing more about those 4 reasons when not to be an S corporation, I'm going to link that video. It should pop up here soon. and also the detailed videos on each one of those reasons has been produced. So make sure you check them out. So with that said, again, I'm Navi Muraj here trying to help you save thousands of dollars in taxes for your business. So I'll wrap up and just say that, hey, thanks so much for watching. Please do subscribe, and I'll see you in the next video.